2023 has seen a flurry of initial public offerings or IPOs in the stock market. If you're planning to invest in any of these, then this video is for you. Welcome to TOI Wallet Talks, as Siddhartha Khemka of Motilal Oswal Financial Services explains some key factors that investors should watch out for when putting their money in IPOs. So basically, 2023 has actually seen several IPOs in the market, and so many more are lined up in the rest of the calendar year. So, what is driving this market sentiment?
So if you look at generally within the IPO market, bulk of the new issues that come are from the mid and small cap space. We have very few larger ones that come for IPO. That happens once in a while, like we saw in the case of LIC, which was the largest IPO, and the previous one was Coal India. So the IPOs come when the overall market is very buoyant, and especially when the mid cap, small caps are doing well. That is a time when the market is receptive to these new issues. They get lapped up, and that is what the promoters want, that when they come up with the initial offering, it gets fully subscribed and there is an enthusiasm in the market. When does this happen? This happens when the economy is doing well, the companies are reporting strong earnings growth, and there is also a lot of liquidity flows into the market, be it directly or indirectly through mutual funds, FIs, which are looking for newer investment opportunities. And that is where these new IPOs or the new kids on the block, they offer that opportunity for the investors to look at some of these new themes or the new stocks that gets listed.
So, Siddharth, normally IPOs are seen as a investment option if you're getting a very good bargain or a bargain price. But how true is that perception to begin with? And also, if I'm an investor, then should I be looking at IPOs or should I be looking at the already listed shares in the market? What kind of investors should actually get into IPOs?
Yeah, Shruti. So very important question, especially for investors who are looking at IPOs. So what we say is, or what we actually analyze or look at at any IPO is that what it brings to the table. So the first and foremost thing is, what business is the company into? And should I be looking at investing in that business? So a lot of times we have some of the sunrise industries which come up as a newer space within the listed entities. There may not be a lot of listed companies within that space, and like we saw earlier when with the privatization of the insurance companies, the initial 5-10 years they made losses, and once they started making profits, we saw a whole host of IPOs within the insurance space, especially within the private insurance space. And that was a new segment for the investor community. And we know globally that insurance companies make money over a longer period of time. And we did not have an opportunity to participate in these themes. So that gave an opportunity to look at some of these names which came for IPO. There was no alternative already listed within the market. So hence, that warranted and look at these IPOs. So that is the foremost thing that one should look at. Then there are other several factors that we can discuss in details, but I think that is the major factor, whether we want to play a certain theme and whether there are already attractive investment opportunities within the space that is listed, or this company which is coming out with an IPO offers something different, maybe in terms of market leadership, maybe in terms of the product segment, or maybe in terms of a new segment getting listed itself. So that is something that makes the IPO interesting, that generally we have a look at.
Okay, but as you spoke, there are several new businesses coming up, whether in the global space or in the new age business space, and that they are getting listed now. So what are the top 4-5 factors that as an investor I should definitely look at before deciding whether this is the right IPO investment for me?
Definitely. I think one should have a checklist for IPOs, and these 4-5 pointers that we are going to discuss will help you make that checklist. So the first point we already discussed is the business that this new company is into. So is that a good business? Is that a high growing business? Is it an underpenetrated segment? Is it a new age business that we saw recently? As I gave an example of insurance, we saw a lot of these e-commerce companies getting listed last year. We saw a lot of defense, government PSU defense companies getting listed. That was a space that was not available earlier. So now we are seeing some of the hospitals getting listed. There are only hardly 2-3 hospitals that were listed earlier, but now we have 6-7 of the hospitals listed. Similarly, you have hotels. We have only Indian Hotels, which is the largest player listed. There are only two, three smaller hotel companies if that get listed. So
Hmm.
first is the business in which the company is into.
Right.
It has to be a strong growth sector. What the quality of the management? If it is a good business, but the management quality is not that good, you will not make money. It's the same kind of checklist that we do for existing companies within the listed space. But more important, because this is the first time that they have come to the market, they have not reported their numbers, they have not spoken to the investment world earlier. So all the more reasons to check the promoters capabilities, the corporate governance, and these details you will find through the RHPs that these companies file with the SEBI. You will have all the details about the promoters, the issues, the positives, the negatives, and you can check with some of the suppliers, some of the market checks that one can do. Then
Hmm.
third is the investment banker. How good or bad the track record is of the investment banker who has brought this issue, right?
Hmm.
Then fourth point is financials. This is again very important for investing world. How good or bad the financials is. If it is in a space which has a lot of listed peers, we can compare it with other listed peers in terms of growth, in terms of margins, in terms of profitability, in terms of cash flows, in terms of return ratio. So these parameters will help up to see how good or bad that company is vis-a-vis its peers. If there are no peers, then we have to see in terms of the growth potential, the profitability by itself, the return ratios, and try to gauge whether the financials is healthy and is it an investable company.
Hmm.
And finally, and the most important factor, if every of these 4 5 points that we discussed is good, what price are we paying for this IPO? It has
Hmm.
to leave something on the table because it's a new offering. If I overpay, then I am in for a trouble. It's generally the lure for IPOs is that the promoters come and they want full subscription, so they offer something, some discount to the valuation that the market would want to subscribe to, and that discount is something that we see usually with the pop-up gain or the listing gains that we say, and that is what retail investors ideally look for. That
Hmm.
because it's a new IPO, I get the shares at a discount, and once it starts trading, a lot of these large investors would want to participate and pay a premium to the price that we as retail investors pay. So valuation is very important factor while deciding. We have seen a lot of IPOs where the IPO valuation has been overpriced, and that kind of did not go well in the market. Some of the new age IPOs were priced way ahead in terms of profitability. There was no path, and they priced it much higher in the IPO itself, and we saw they falling down. Now there is interest coming back with the return of profitability. So the most important factor after all these things is what the price that you pay for these IPOs.
So, Siddharth, is IPO financing something that one should be looking at?
So, Smriti, I think IPO financing was popular earlier, especially in the HNI category where there was a pro rata allotment used to happen. But now I think SEBI has streamlined the IPO applications to an extent where they have sub-categorized. Even in the HNIs, there are two categories, the 2 lakh to 10 lakhs and the 10 lakhs and above. And in
Hmm.
both, in the 2 lakhs to 10 lakhs, mostly we see that it is a lottery-based system where you get a minimum one lot, and until unless there is a huge premium at which it gets listed, the IPO financing doesn't work that much. And even in the 10 lakhs and above, oversubscription is so much that you end up getting a very small proportion of what you have applied for. So it works only for the ultra HNIs in terms that they can get the leverage to apply more, but there is a risk that if the listing doesn't happen at the premium, which includes the cost of financing, then you are in for a loss. For retail investors, I would suggest that don't think of or don't consider going for a financing for IPOs. Just apply for how much money you have, either in the retail category or even if you have money in the HNI category without financing. We have seen in the markets, there will be opportunities where you will get opportunities to add stocks in decline, and that is what you should strive for.
Okay, finally, Siddharth, coming to the overall broader market, what is your outlook for the remaining calendar year? Are there any targets there?
Yeah, so Smriti, if you look at what Indian markets have done in the last 5 6 months, is that in this financial year, that mid and small caps had sharply outperformed, and now they're witnessing some kind of profit booking. But at the same time, we are seeing a steady growth or return from Nifty, which is basically representing the large caps. So Nifty is given about 13% return on a YTD basis. We expect that the returns from Nifty could remain steady and stable, while there would be some profit booking in the near term for mid cap, small caps, because of the sharp run up that they have seen. If you look at the valuations in terms of mid cap, the Nifty mid cap index was trading at about almost 25-30% premium, which is warranting some kind of pause in their momentum. Hence, you are seeing that kind of pause. But in terms of large caps, we are seeing that the macroeconomic trend continues to remain very strong. The economic growth is strong. The corporate earnings in Q1, the Nifty 50 earnings grew at 32%. And for the full year, the asking rate or what we are forecasting is about 18-20% growth. So it is much above that. So we expect that Indian equities would continue to deliver about 8 to 10% return for the remaining of the year, and that would be a very handsome return compared to the global environment.